So, what exactly was said in today's discussion with the head of the Federal Reserve, Jerome Powell, in Sweden? So, what's going on, team? It's Ricky with Technical Solutions. It was over an hour live stream. And I know a lot of you guys probably don't even want to spend even just a couple of minutes reviewing that. So I thought I would kind of summarize some major points that were made by the head of the Federal Reserve, Jerome Powell, in today's discussion. I really hope that you learned something new. And if you do, please consider dropping a thumbs up and subscribing, as I love keeping all of this information super simple and making it, again, a little bit more easy to understand. So let's go ahead and start sharing my screen. Overall NASDAQ market as of right now is pretty break even, which doesn't really surprise me. Nothing that he said was quite surprising. I just wanted to pull up a couple of major points. So Federal Reserve Chairman Jerome Powell on Tuesday emphasized the need for central bank to be free of political influence while it tackles persistency of high inflation. Now, the reason that this is coming up is there's been elected officials from both sides that continue to try to sway or convince the Federal Reserve to be more favorable for whatever their agenda might see to be more suitable, right? And the reason that he says this is there's also been backlash of encouraging the Federal Reserve to make decisions that are more eco-friendly, or policies to be put in place that are greener. And one of the things that he said that I love that he put very well put together is, in other remarks, the central bank leader said that the Fed is not and will not be a climate policy maker. He made it very clear that he expects that the expectation of the Federal Reserve to be a climate change policy maker is ridiculous, right? There's specific elected officials that you put in power to focus on those specific tasks and subject, and that is not the job of the Federal Reserve. They said that our scope of work should stay small, and they have one focus, and that is price stability. Price stability is the bedrock of a healthy economy and provides the public with immeasurable benefits over time. But restoring price stability when inflation is high can require measures that are not popular in the short term, meaning that they raise interest rates, and normally when you raise interest rates, it slows down the economy. A lot of people are not in favor of him raising interest rates because of how it slows down the economy and does not promote job growth, right? There's been one side that really has tried to encourage the Federal Reserve to stop with these interest rate hikes because of the negative influence that is having on the economy, and of course, stunting job growth. Other than our last unemployment report actually came in lower than expected. So not too bad, right? But one of the things that he said is the absence of direct political control over our decisions allow us to take the necessary measures without considering short-term political factors. He's saying that he wants the Federal Reserve to focus on what they need to focus on, what's best, right? He is tired of trying to be politically swayed from one side to the other and making specific policy decisions that would be more favorable to one side. They want to remove any external factors and focus on one thing, and that is price stability and getting inflation down. There was nothing that was said in this discussion today that gave us a little bit more of a clue for future interest rate hikes and how aggressive they're going to be. To summarize, 2022, the Federal Reserve had a total of 7 interest rate hikes that amounted to a total of 4.25%. There was no clue on how aggressive they were going to be for the start of the year, but I think that is to come after our up-and-coming CPI data report. The reason that I found this to be so valuable, and the reason that I wanted to summarize it to you guys is because, we often believe that there are political or governments that try to sway the Federal Reserve from one side to the other. At least based off of this discussion, I guess it really just comes down to if you believe them, that they will not be swayed from one side to another. They're focusing on one thing, that's price stability, and the best way for them to be able to stabilize those prices is to continue their interest rate hike to slow down the economy, which does mean that, again, how he put it is it will create short-term pain, but again, like we've said it all the time, it's to promote long-term gain. He needs to get inflation down. That means that more jobs will most likely either be lost and or job growth will slow down. It's not something that obviously businesses or our entire economy is going to benefit from short term, but overall long term, it's the way that the Federal Reserve moderates inflation, right? It's been like that for a very long time. So it does not surprise me. But again, people are always convinced that the Federal Reserve is controlled by a much larger picture, and it might be, right? I mean, I'm biased on that, but I just wanted you guys to have a better understanding of what was covered today in that discussion in Sweden. So I did take a position. I'm shorting the market. I have a pretty hefty position right now. This position originally started within my live trading session with the LPP team, and I'm very grateful that I did. I'm up a little bit over $6,000 so far on the day. My goal is to sell a little bit closer to that $52 price point. Again, goal is something to work towards, not something that has to play out exactly according to plan, but I'm going to be excited to follow up with it with today's later video. And also, if you guys follow me on Instagram, which is the third link in the description, I'll make sure that I cover that in that video as well. I do want to remind you that what's the most important thing to come this week. Again, my job is just to make you aware. Up and coming CPI data report that's going to be on Thursday, 1 hour before the market opens. I am wanting to live stream it. I'll leave it up to you guys. Make sure you subscribe to the channel. Make sure you get this video to over 1,500 likes. And I would love to host that live stream to catch how the market reacts for that CPI data report, which is the inflation report that will determine if the market goes up or if the market goes down. And there's no question that the market will react to. Normally when these CPI data reports are released, they're the most significant days. Normally we see moves for the overall NASDAQ market anywhere from like the 2 to 4% we've seen. The crazy thing about that is, the triple leverage ETFs move 3 times that, right? So we're talking about 6 to potentially 12% moves on TQs or SQs, depending on which way the market goes. Remember, I'm day trading this. I'm not going to be holding this overnight. So I'm excited to follow up and when I decide to lock in profits or reduce my position size if there ends up being a change of direction. Friendly reminder, I do want to remind all of our new Learn Plan Profit members that on the thank you page, so when you click the second link down below and you get $150 off when you sign up for Learn Plan Profit 2.0, we are giving away a free day trader starter kit. And all you have to do is click the link here, select your size, and the discount applies automatically at checkout, which means that you get a free day trader starter kit, which comes with a free mouse pad, a free flag, a free trading journal, and a free Wall Street tee, all just by joining our Learn Plan Profit 2.0 team. And again, if you want to learn more about that to see if it's a good fit for you, that's that second link in the description down below. But again, that link is provided for you on the thank you page once you check out of Learn Plan Profit 2.0. If you have any questions about that, feel free to send me a direct message either via Instagram, which is the third link, or via Discord, and that's that first link in the description. I appreciate your time. Hope that earned your thumbs up. I'm excited to follow up with the up and coming CPI data report. Make sure, again, if you're uncertain about market direction, make sure that your position size reflects that, right? Now is not a time to be greedy. Now is not a time to be hopeful. One of the best positions that you can be in is a calculated one, right? Even if the market does end up selling off, if you're cash and or if you have money on the side, you're always able to at least either short the market and or buy the dip, right? At least you have options. If you're fully invested right now and the market ends up selling off or going against you, then again, that's one of the worst feelings, I would say, when it comes down to trading. So please do not put yourself in a hopeful position. Put yourself in a calculated position, not just for best case scenario, but even worst case scenario. Like always, let's make sure that we end the year on a green note. Take it easy, team.